Welcome to another time going around the world of business, globally, starting right here. And this is Business Incorporated. Here's what's coming your way in the next 55 minutes. There are stories of tapering food prices in Kano, in Nigeria. Our correspondents will give us updates on that. Looking so good in South Africa. Inflation is up 5.3% for January 2024. And AFDB gives projection for Rwanda and Tanzania. Welcome to the program. I'm Ini John Mekwa. This is Business Incorporated. We start as usual from the global space where oil prices regained some ground in Asian trade on Wednesday amid concerns over attacks on shipping in the Red Sea and growing expectations that cuts to U.S. interest rate will take longer than thought. Brent futures rose 30 cents. That's about 0.36% to $82.54 a barrel. While U.S. West Texas Intermediate crude was up 20 cents, 0.34%, that is, at $77.30. And that's encouraging energy companies to sell now rather than later to store up products for future months. The premium slid to 4 cents a barrel on Wednesday. And Washington on Tuesday again vetoed a draft United Nations Security Council resolution on the Israel-Hamas war, blocking a demand for an immediate humanitarian ceasefire. Meanwhile, Russia, which has pledged a cut output of 500,000 barrels per day as part of package of cuts with Organization of Petroleum Exporting Countries and its allies, has said that it intends to fulfill its OPEC Plus quota in February, despite a decline in oil refining. Refinery throughput in Russia has fallen by 7% since the start of the year, and that's according to the country's energy minister, after facilities were damaged by Ukrainian drone attacks. In the grain space, Chicago wheat futures for May 2024 rallied 3.1% in Chicago, which helped London feed wheat for May 2024 recover into positive territory after an early foray below 160 pounds for a ton. Paris milling wheat for May 2024 at what point came back within $1 for a ton of the much-watched $200 a ton mark. Aside from bargain buying interest, the catalyst for the rebound was unclear after prices earlier headed lower again, continuing to feel pressure from strong competition among exporters for orders at a time of ample Russian offers. However, some international business are recording on the day, with Jordan buying a reported 50 KT of wheat and Japan issuing a tender too. The EU Commission also reports EU export data, which suggests a stronger start to 2024 than previously reported. The Commission, which has struggled collating data for its weekly trade report, revised its figure for EU soft wheat exports up by 1.2 million to 19.9 million tons. The extent of the rebound in Chicago, which was on course for what would be its strongest session in 3 months, reflected profit-taking by funds on some of their short positions. Now we head to Nigeria, see what's happening there. Well, another change in the FX continuous conversation. The federal government, through the Central Bank of Nigeria, has again raised the exchange rate for cargo clearance to 1,605 for a dollar. And this is coming days after the rate rose to 100, 515. In fact, as at yesterday, it was at 500 1,515, 1,515. But today, we have it at 1,605. And then between January and now, we've seen that rate being taken up 6 times. It was moved from 952 naira for $1 in December to 1,356, and then 1,413, and now it's at 1,605. Well, still staying in Nigeria, but away from the FX issue, it's no longer news that 6G has the potential to revolutionize the way people experience connectivity, while the prospect of 7G also comes with greater ease for work and play. However, with this advancement come responsibility to address new risks from cybersecurity threats to ethical considerations, ensuring that there's a way for secure and inclusive digital future is what the Nigerian Communications Commission looked into at their risk management conference. Emerging technologies in the telecom industry come with risks, and with Nigeria operating with over 200 million mobile subscribers, there's the need to highlight emerging trends and ways to curb the risks. The Nigeria Communication Commission has these in focus at its risk management conference.
You will have noticed how rapidly things have been changing, not only in our own environment, but globally. A lot of these changes have brought about very rapid developments or changes. You can imagine if any organization hadn't looked that far ahead to see what led ahead, I mean, how much of an impact that would be.
Then a panel to speak on not just the dangers, but protection strategies.
According to ISO, the essence of risk management is really to create value and also to preserve or protect value within your organization. And if risk management is going to be able to achieve that, it is critical that risk management moves beyond just another department and moves to the center of strategy.
What does this mean for you and I on an everyday basis? When you get your devices, because we are always happy to know what's the latest trend. I have the latest gadget, I can plug to the internet, I can monitor my devices remotely. For you as a consumer, right, what are you going to do about that? You always have to ensure you have strong password and encryption measures integrated into your own home base, and also the operators will do likewise.
The Chartered Risk Management Institute intends to take this conversation further.
We have taken a bill to the National Assembly for risk management function to be part of every MDA. Risk management has come to stay, and it is necessary that the public sector also imbibe the risk management practice.
While development in technology makes tasks and living easier, the downside management requires attention from individuals, the government, and corporations. Oh, let's go back to the toppest story in Nigeria, which is the cost of living. However, there are stories that perhaps there's reprieve coming the way of some residents in Kano State. Let's have our correspondent, Nanchin Vincent, now join us to tell us the update. Hi, Nanchin. Good afternoon. I hear the price of some grains are beginning to reduce. What's the situation?
Yes, good afternoon, Ini. Kano State is also facing hardship like it is across the country. And just 2 days ago, prices of some goods have begun to reduce, like in the grain market. I'm right here at Singa Market. Singa Market is also one of the markets where you have all kinds of grains and commodities. And the reduction started like 2 days ago. A bag of rice that used to sell for 60,000 naira is now selling for 53,000 naira. A bag of millet used to go for 55,000 and is now selling for 49,000. We also have beans. Beans used to sell for 95,000 naira. It is now selling for 85,000 naira. A bag of maize used to go for 59,000 and it's selling now for 52,000 naira. The Kano State Public Complaint and Anti-Corruption Commission last week had to seal some warehouses in Kano where they were hoarding food items like spaghetti, kegs of vegetable oil, beans, rice, and other food items. However, now in Kano, like I said, the food items have begun to reduce. Sugar, however, has remained on the increase. A bag of sugar now costs 78,000 naira. It was 75,000 just 2 days ago. The market is really getting confused as people come to the market. Some prices are declining, other prices are on the increase, like sugar, which is going for 78,000 naira. Those who are in the baking industry sector are also not happy about it. Like a loaf of bread that used to cost 1,200 naira, a very big loaf, a large loaf of bread, is now costing 1,600 naira. And so even for the common man, bread is no longer common. That's the situation in Kano. And it is just a few days to Ramadan. And we're here hoping that residents are hoping that the prices of every food item should decline, should reduce, so that people can have their Ramadan with ease.
All right,
that's the situation in Kano right now.
Yeah, thank you, Nancy. But what's driving this? Is it the release of the grain ordered by the federal government? Is it the Ramadan, or is it the effort of the state government?
Yes, I would say it's the efforts of the state government. Like I said, the Kano State Anti-Corruption Commission was at Dawanu Grain Market. Dawanu Grain Market is actually the largest grain market in West Africa, here in Kano. And so when they got there, they had to seal off some warehouses that had very large warehouses that had a lot of food items. You know, we could see rice, we saw beans, we saw spaghetti, 25 kg of vegetable oil and other food items that were in these warehouses. About 10 big warehouses were sealed. And these warehouses were now opened 2 days ago. And a lot of commodities are now coming into the market, you know, forcing the prices of these items to come down. Because initially it was as if there was scarcity of food items, you know, and people wanted to hoard these goods so that they could sell at a high price. However, with this effort, we're seeing that, like I said, some of these food items are coming down. Beans is now going for 85,000 as against 95,000. Millet going for 55,000 as against 49,000, and so on and so forth. And so I think the Kano State government is trying to ensure that these food items come down, you know, with in sight of the Ramadan period in sight, ensuring that people go about the Ramadan with ease. So I would say it's the Kano State government, actually.
So, but would you say this is sustainable? Is the task force still going about, you know, checking for foods that have been hoarded or kept somewhere? Or, I mean, if it's a one-off thing, that means the supply is going to stop again.
Yes, I actually spoke to some traders in the market, and some of them said there are lots of warehouses, you know, and so many people are still hoarding these goods. And so they are like, we don't think this will be sustainable, you know, because of the fluctuation, especially in sugar and in flour. You know, they said sugar was just 72,000 last week. 2 days ago, it was 73. Now it is 75,000. And, you know, sugar is used for almost every food in every household. And so it's, I don't know how sustainable and how much the government would do to ensure that this is sustainable, considering the fact that fasting will be starting off just a few days from now in March.
All right, Vincent, thank you, Nanchin Vincent, for that update. It's good news. We just hope, you know, it is sustainable and it can spread to other states to the relief of all Nigerians. Thank you for the updates.
Thank you.
All right, now let's head to the markets and see how that's looking at intraday. Of course, we begin with Nigeria. That's where we are, right? So yes, we begin from Nigeria to see how the market is doing for the NGX. There's a recovery at 0.26% for the NGX after 2 days of profit taking and correction of the market. We see investors seem to be getting more interested in that market. That's the Nigeria's equities market. So it's up 0.26%, if we could have those numbers right there. And then for South Africa, the GSE, it's 0.31% in the red. EJX, that's for Egypt, is however positive, 0.31%. And Kenya, 0.41%. Seems we can have the number. Let's see if we can speak to Ademola Oshuntoki. He's a fixed income dealer with Access Bank. There was an auction on Monday, which of course a lot of analysts have tied the importance of what's going on in the country, mopping up cash from the market, and that could give the market, and it could give the economy or the government, some level of success in dealing with inflation, perhaps. So we would say, I hope we can have Ademola join us and tell us how that auction went, if it went as expected or better than expected. Meanwhile, we move to other markets in the Middle East now. Abu Dhabi was in the red, 0.37%. Dubai also in the red, 0.67%. Saudi Arabia, however, flipped 0.09% in the red, and Qatar also in the green, 0.17%. All right, I believe we do have Ademola now. Ademola, can you hear me?
Yeah, you clearly.
Good afternoon. Yeah, good to have you. So tell us, how was the auction on Monday? How successful was it?
Yeah, so on Monday, we saw the DMO offer what was a historical 2.5 trillion across the 2034 as well as the 2031 paper. Following that, what we saw in terms of the stock rates was we saw them close at about 18.50 and 19% respectively. These are historical highs for 7-year and 10-year papers. The total subscription stood at about 1.9 trillion. So this was undersubscribed from the 2.5 trillion initially offered. And we saw them sell about 1.49 trillion from this. So again, another good move from the DMO. We're aware that there's an NTP auction today. So we await to see further traction in terms of where the stock rates are going to be. There's about 256 billion, which is going to be offered at the NTP auction today.
So can we at this point determine how much of it was FDP or how much, was from local investors?
So I think it was significantly from local players that we saw within this market. As we know, most of the FPIs are looking to play within, especially the NTB auction, as they're looking at more short-term investments. So anything from the 91 to 364 day. So this was this was mostly subscribed by local players, was what we saw within the auction on Monday.
So do we see this feeding into inflation? We know that the government is trying to use this as an instrument to also mop up liquidity in the economy. Do we see this as a success towards that?
So I think we can look at it as a success, and I think I'll look at it from 2 points. One is in terms of providing more FX supply into the market. If we look back at the the NTB auction that took place about 2 weeks ago, where about 1 trillion was offered, market liquidity that week stood at about 2.1 billion dollars, essentially, which was a good drive in terms of inviting a lot of FPIs to play within this space. And looking at it from a market liquidity standpoint, again, I think it's a good move in terms of mopping up market liquidity. We're going to expect those figures to drop slightly today. Today it stands at about 195 billion in the credits, but we know that the NTB auction settlement is going to the bond auction settlement is going to take place today, and that's going to further reduce market liquidity that we're seeing within the system, as well as the NTB auction, which is taking place as well.
But can we say it has done some good when it comes to FX liquidity, since it's mostly domestic investors?
So I think in terms of looking at it from an FX standpoint, I think what I'd be watching is to see what happens within the NTB auction today. we know that there's about 256 billion, which is on offer. So we're waiting to see if the DMO is going to oversell, because as we expect, this will be largely oversubscribed. So we'll wait to see what happens there. If this is oversubscribed, then we can expect to see more attractive rates. We know a key indicator for a lot of all these FPIs, especially within the last auction, was the attractive yields that they saw. At the last NTP auction, they stopped at about 19% for the 364-day, and the 182 was about 18%. So for a lot of FPIs, they'd be watching patiently in terms of what is happening, especially within that NTP auction that happens today.
What's the yield looking like from yesterday even up to today's bond trade?
So we're seeing that we're seeing rates at about 18% within the market is what we're seeing today. So again, kind of a good return on investments for a number of key players within that market.
What are your expectations at the close of the trade that we're having today? What do you expect, especially when you also look at, we're trying to get FX liquidity, so the foreign guys and then the domestic investors.
So is this in regards to the NTP option specifically?
Yes.
Okay. So I think, so for today, I'm expecting we would see rates hopefully closer to what we saw at the last NTP auction. It might not stop at 19% just quite, but if it's anything close, I would expect to see a lot of significant players, especially as FPIs, play within this market. So we should see our FX figures slightly increase. So that would definitely help us as a country. We know that a key indicator for why we've been seeing a number of depreciation, especially for the NAPEX, has been that supply issue, as we have demand significantly outweighing supply. So if we can see rates close at about 17-18%, I think that would be a good move in terms of providing more liquidity into the system. And I think, within the short term, providing a lot of FPI funds, and the hope and the key drive is, long term, we want a lot of FDIs to be playing within this market, because that's what will provide a lot more stability. But I think within the short term, if we can see more elevated rates, especially within the NTP auction and subsequent NTP auctions, we should see more significant liquidity within the market.
So should we expect that the success of the auction will be to the detriment of the NGX? Because we noticed that on Monday, Tuesday, the NGX was down. We saw a little bit of rebound this intraday. We don't know if the investors will turn the way of the auction again.
So I think, again, as I said, we're patiently waiting to see, what will happen in terms of when the results are out, to see how that's going to play. I think, as you mentioned, the hope is that, we'll continue to see more flows, especially within these NTP, within the NTP auction. We know that this has been a good move, especially the last one, in terms of providing more liquidity. If we compare it against the week before, it was about 1.3 billion increase from the previous week. So we're expecting that this would be a good move. I don't think it would be to the detriment of the NGX market. And the hope is that, from both markets, we'll continue to thrive and provide more supply within our market.
Thank you so much for that. We'll certainly watch that space and see how the auction ends today. Ademola Ojutoke is a fixed income dealer with Access Bank.
Thank you for having me.
Now let's head to other markets. Now the U.S. stock futures ticked down Tuesday night after the major averages incurred a second day of losses fueled by a decline in NVIDIA. Nasdaq 100 features shed 0.4%. Features tied to the Dow Jones Industrial Average slipped 62 points, that's about 0.16%. S&P 500 features declined 0.21%. In pre-market action, Palo Alto Networks shed 23% after the cybersecurity company cut its full-year revenue guidance. SolarEdge Technologies also lost more than 15%, dropping on weak first quarter guidance. During the regular session, the three major averages slid, dragged lower by Nasdaq Composites. And from the United States, we go to Asian market now. Asia Pacific market traded mixed following Wall Street losses on Wednesday, while investors assessed Japan's trade data and soaring business sentiment among large manufacturers. Hong Kong's Hang Seng Index jumped as much as 3% before paring gains to 1.86% in its final hour of trade, driven by property, technology, and healthcare. So the Nikkei lost 0.26%, to close at 38,262.16 after Japanese manufacturers' business confidence tumbled. And the data came less than a week after Japan slid into technical recession. And then South Korea's Kospi also went down 0.17%. Australia was also down at 7,608. Just before we go on break, our correspondent in Washington, Maria Bird, has been standing by to give us a recap of Tuesday's trade. Hi, Maria.
The U.S. stock market was in the red on Tuesday as the Dow Jones was down at 0.2%. The heavy tech NASDAQ closed nearly 1% down, and the S&P 500 closed at 0.6% down. It is clear that many investors are concerned that we're really going to have a soft landing, as once was predicted by many economists, as retail sales reports are mixed and showing some fluctuation in what was much to be anticipated a strong economy as it relates to the retail sales. It is also clear that investors are watching to see what will happen in the days and weeks ahead, as the day after the holiday has not proven to be much of an upswing for the U.S. stock market.
All right, Maria, thank you so much. Well, I guess the market is still trying to wake up from that holiday, a one-day holiday that they had in the United States. Let's take a break now. When we come back, we head to other parts of the world, but still around the world of business here on Business Incorporated. Stay with us. Welcome back to watching Business Incorporated right here on Channels Television. Let's head to Berlin now, see what's happening. Well, the EU is opening an investigation into TikTok over online content and child safeguarding. This has happened in the UK before now, so I guess it's time of the European Union. Video platform is under scrutiny over potential breach of EU's Digital Services Act. That's the DSA, in areas such as age verification. Well, let's get the details now. Ekram joins us from Berlin. Hi, Ekram, good afternoon. What are the details of this?
Thanks for having me, Ini. The European Union will investigate whether TikTok breached online content rules aimed at protecting children and ensuring transparent advertising. This new investigation is putting the social media platform at risk of a hefty fine. EU's industry chief Thierry Breton said that the decision was taken after analyzing the short video application's risk assessment report. TikTok's owner, China-based ByteDance, could face fines up to 6% of its global turnover if TikTok is found guilty of breaching the DSA rules. The EU's Digital Services Act, or DSA, which applies to all online platforms since February 17, requires large platforms to do more to tackle illegal online content and risks to public security.
This investigation.
Well, the investigation will be looking at areas including protection of minors, maintaining records of TikTok's advertising content, and whether its algorithms led users to damaging content rabbit holes. The EU said that the investigation into child safety on TikTok includes age verification and the default privacy settings used for children's accounts. This formal investigation was launched to ensure that proportionate action is taken by TikTok to protect the physical and emotional well-being of young Europeans. According to the Digital Services Act, online platforms used by more than 45 million users per month entail a systemic risk for society. Therefore, they must follow a specific regime of content moderation, including transparency and risk management obligations. Last year in February, the EU announced the first batch of very large online platforms, and in April, very large search engines. The list was then updated at the end of December. It includes social media platforms such as Meta's Instagram and Facebook, as well as TikTok and X.
So let's shift grounds and look at the investors. What are they focusing on today?
Investors today are holding their breath as the poster child of the AI boom, Nvidia, is set to report yet another lucrative quarterly earning. NVIDIA is replacing Tesla as Wall Street's most traded stock by value and is widely expected to more than triple quarterly revenue to roughly $20 billion. The spotlight will also be on the minutes of the US Federal Reserve's meeting in January. Investors try to predict the start of the monetary easing cycle with the first interest rate cut. In Europe today, the Eurozone consumer confidence outlook is the only major report that is anticipated by investors.
All right, Ekrem, thank you so much for that update. All right, I believe we can now head close to Berlin, then head to the UK, London, where Juliana comes back to us. Juliana, it's good to have you back. Where have you been? We've been missing you.
Having a much-needed break, Annie.
Well, good to have you back. And I think you come with a little bit of good news. Government finances showed large surplus last month, more than double the surplus of last January. How did this happen, and what does it mean?
Yeah, good afternoon, Annie. Thank you for always welcoming me back with such grace. But yes, you know, this is good news for Chancellor Jeremy Hunt, who, of course, is preparing for the spring budget, which is going to be unveiled next month. A really important fiscal moment for the Conservative government because, of course, again, as I said repeatedly, if you look at all of the polls in the United Kingdom, they all indicate that Rishi Sunak and the Conservatives are going to lose pretty badly at the upcoming general election, which is expected to take place within the next couple of months. We know, because we've heard from the IMF, the OECD, all of these international monetary think tanks, that there has to be prudence.
All right, and we also see another, well, good news. We've been waiting for this for a while. King Charles. The bank notes will begin circulation by June the 5th, and I think you already have pictures of it.
That's right. I'm not sure, I'm not sure if we finished our last discussion, Eddie, but I will jump to the story about King Charles, who, of course, we know is recovering from cancer. We hope he is recovering from cancer. We haven't seen or heard much since that announcement earlier this month, but there was an announcement this morning from the Bank of England about his effigy, which is going to be circulated on the polymer banknotes from, I believe, the 2nd of June, which kind of marks a year since his pomp coronation in May of 2023. Now, there are lots of environmental issues at stake, and we also know that most people, don't really use cash in the UK anymore. They use digital payments. So the effigy of the Queen, so if you've got a note in your back pocket at the moment and it's got the Queen's face on it, it will, of course, still be legal tender, and it will circulate alongside these new notes of King Charles. There have also been coins circulated of King Charles. They've been circulating, I believe, since about 2022. So we do actually have him on British pounds. But yeah, so we're going to have this new notes available in the next couple of months.
Well, I don't know if that's going to affect the value of the pound, but I can tell you, Juliana, looking at the currency market is not where a lot of Nigerians want to look at this time.
I know it's incredibly difficult at the moment, particularly for us in the diaspora, because whether we like it or not, the fact is remittance is the biggest economic input for the Nigeria federal government. So of course, when people are suffering, they expect their loved ones in the diaspora to basically help provide a welfare state, which is what diaspora remittances is. That is not going to be impacted by King Charles being circulated. But perhaps we can have a look at the numbers at intraday. The FTSE All Share is down. It's down, Innie, by 0.78%. The FTSE 100 is down too by 0.93%, and the FTSE 250 is down by 0.03%. Worth mentioning, Innie, that HSBC, despite posting its biggest profits in recorded history, they lead the fallers on the FTSE at intraday due to a $3 billion impairment charge that they had to pay because because of some banking shares they have in China. So not great. It kind of fell short of Citi estimates. And also it's worth mentioning that it's around this time of the year that the FTSE all-share does get a reshuffle. And EasyJet, which is a budget airline, they are going to be promoted into the FTSE 100 after their share price has surged about 16% in the past 12 months. They were always in the FTSE 100, but of course the world shut down during COVID-19 and they were demoted into the FTSE 250, so it's worth mentioning that. Let's have a look at the currencies market. The British pound is trading down against the US dollar by 0.08%, though it's trading up against the euro by 0.03%, but down against the Japanese yen by 0.02%. Hopefully you heard me nice and clearly.
Yes, I did, Juliana. I heard every word of that. Thank you so much. And I do like, the update on the HSBC. Thanks for that also. That's why it's always good to have you back, and we miss you when you're not there.
Thank you, Renee. I miss you too. Thanks so much.
All right, now let's look at what's going on in other African countries. We start from Zimbabwe, the biggest port in Mozambique that's become a key hub for global chrome export. Will upgrade a railway link, bolstering a planned $2 billion capacity expansion. And the Africa Development Bank is financing the purchase of $40 million of locomotives and wagons, and another $30 million is under consideration from the Development Bank of Southern Africa for improvement on the line that connects the port of Maputo with South Africa. And this is according to the AFDB. We'll see AFDB has been pretty busy, on the continent in the last couple of days. We welcome such. We're also enjoying it in Nigeria. But it's not a very good one for South Africa, as after experiencing 2 consecutive months of decline, the annual consumer inflation saw a slight uptick in January, increasing to 5.3% from December's 5.1%. The month-on-month consumer price index change stood at 0.1% in January. Notably, categories within the CPI basket witnessing the largest annual price increases include restaurants and hotels and food, non-alcoholic beverages and health. Despite a 5.2 monthly decline in fuel prices between December and January, the annual rate for fuel surged from minus 2.5% in December to 3.3% in January.
The categories in the CPI basket with the largest annual price increases were restaurants and hotels at 8%, food and non-alcoholic beverages at 7.2%, and health at 6.5%. A 5.2% monthly decline in fuel prices between December and January was not enough to subdue the annual rate for fuel, which jumped from a negative 2.5% in December to 3.3% in January. This contributed to a sharp rise in annual transport inflation to 4.6% from 2.6% in December. However, with the festive season over, public transport tariffs decreased by 2% in January compared with December, dragged lower by monthly price decreases for long-distance buses, down 21.2%, car rentals down 12.1%, and airfares down by 4.1%.
South Africa, like Nigeria, inflation is still up there. Well, we'll go to Egypt now. Something interesting right there. The Minister of Education and Technical Education, Rida Hegazi, has issued a directive banning the use of mobile phones during the course of the academic and education process in all schools. Of course, that's in Egypt. The directive ordered strictly implementation of provisions of the Ministerial Resolution number 187 of the year 2023 regarding regulations for schools at the pre-university education stage. The ministerial decision prohibits the use of mobile phones in all schools to ensure order and discipline during the academic and educational process. It also stipulates that this directive shall be implemented and that all competent authorities, each within its jurisdiction, must implement all stated provisions firmly. Interesting, right? Well, let's come to Nigeria, where the National Bureau of Statistics has said that 11.94 billion litres of premium motor spirit, that's petrol, were imported in the first half of 2023. The NBS stated this in its Petroleum Products Distribution Statistics for half-year 2023, released in Abuja. The report said that the figure of 11.94 billion litres of PMS reported in the first half of 2023 amounted to an increase of 3.29% compared to 11.56 billion litres recorded in the first half of 2022. It noted that 2.83 billion litres of automotive gas oil, also known as diesel, were imported in the first half of 2023, and this indicates a 49.72% increase compared to 1.89 billion litres recorded in the first half of 2022. The report notes that PMS truck out stood at 11.48 billion litres in the first half of the year, last year that is, indicating 5.83% decrease compared to 12.19 billion litres recorded in the first half of the preceding year. It said 26.07 million litres of household kerosene were locally produced in the first half of 2023 compared to 22.33 million litres that was recorded for the first half of 2022. Well, still staying in Nigeria now, a bit of good news came up yesterday, but we're yet to see the impact on the streets. Talking about the petrol, you know, a lot of filling stations in Lagos are still witnessing long queues, and some filling stations shut and not open to give services. And this is in spite of that agreement by NATO and stakeholders, including the Minister of State for Petroleum, after their meeting yesterday in the Federal Capital Territory, Abuja.
This meeting between the Minister of State for Petroleum Resources and members of the Nigeria Association of Road Transport Owners, Natural Oil and Gas Suppliers Association of Nigeria, and other stakeholders in the oil and gas sector is a follow-up to Monday's meeting aimed at stopping the planned strike by members of NATO. Today's meeting held behind closed doors. After about an hour of deliberations, journalists were re-invited into the meeting room where both the Minister of Petroleum Resources and the NATO president announced the suspension of the planned strike.
After, consultation with all stakeholders, we have come to the conclusion that the strike will be called off, or has been called off. You see the president of NATO here. You also have other stakeholders that are here. All the issues they raised have been addressed, and I've also given commitment on behalf of the government that going forward, whatever government is expected to do will be done. We'll keep our own commitments, and we've started paying some of the breaching claims that they raised yesterday. And as we get more money, we'll continue to pay them.
Even though we do not get what we want 100%, but at least there is some movement, and to look at the pains of the general public, Nigerians, everybody, and go back to normal work. Going forward, we will continue to negotiate with the marketing companies based on the economic realities.
Earlier in the day, the Natural Oil and Gas Suppliers Association of Nigeria had asked the federal government to urgently address the disparity in the exchange rate, which it says is impacting negatively on their services.
Let the government come out and say 500 naira to a dollar or 200 naira to a dollar, whatever rate that they come out with, they should stand. Government should act fast, at least before the end of the month, adjust something fast. Otherwise, by the end of the month, the way things are, we don't need to go there and say we're withdrawing service. On its own, the service will withdraw.
The rising cost of living in Nigeria has largely been attributed to the high cost of diesel, petrol, and the continuous fall of the value of the naira, a situation that many citizens want the government to urgently address.
An address, I guess the government has no choice but to do. Now, leaving Nigeria now, the Africa Development Bank Group has ranked Kenya's neighbors among the fastest growing economies in 2024. The report by the African Development Group projected 11 of the world's 20 fastest growing economies this year will be in Africa. The top 11 African countries projected to experience strong economic growth are Niger, placed at 11.2%, Senegal, 8.2%, Libya, 7.9%, Rwanda, 7.2%, Côte d'Ivoire, 6.8%, Ethiopia, 6.7%, Benin, 6.4%, Djibouti, 6.2%, Tanzania, 6.1%, Togo, 6%, and Uganda, 6%. Nigeria isn't there, unfortunately. Our growth rate is still about 2 to 3%. Well, overall, the continent's gross domestic product growth is expected to average 3.8% this year, 2024, and 4.2% next year, 2025. That's higher than the global average of 2.9 and 3.2%. All right, let's get our acts together in Nigeria so we can be among those countries. Now let's head to the crypto space and see what's happening there. I see a sea of red. I thought Ladi was the problem, but Ladi isn't here today, and yet we still have a sea of red. So it wasn't Ladi after all. We need to do something about this. So Bitcoin is down almost 1%, 0.96% there, and is now at 51,000. Lost the 52, at least for now. And but Ethereum is still thriving, 0.38% at 2,913.33. BNB, XRP, Cardano, and all of that, they're still looking good for now. And the market is still very, very greedy. Investors are still looking for how to pull out their profits at this time. I wonder how the next correction will look like. But it's 78, beg your pardon, and it's extremely greedy. But as some of our analysts have warned, this does not automatically mean that you're going to make profit if you decide to sell at this time. So do watch out and customize your decision, your investment decision. So there you have it. Bitcoin is down, really down, almost 1%. Ethereum is up, as well as BNB, Cardano, and XRP, following the path of Bitcoin, lost 3.70% at 54 cents. But I think the biggest story going on in Nigeria now has to be related to FX, I guess, is that crypto trading platform Binance has confirmed that it has limited trading on the Nigerian currency for the USDT, which is a stable coin pegged against the US dollar, to address what it described as unusual currency movement. Yesterday, when Ladi was here on this segment, he did speak with his guest on how a lot of Nigerians seem to have embraced USDT. Now it seems that perhaps the government or Binance is doing something about this. But anyways, let me find out from someone who is really into it. Sheun Daniel is the Chief Executive Officer of Alpha Geek Technologies. Hi, Sheun. Good afternoon.
Hello, good afternoon.
So, I'm great. Good to have you on the show. So tell us, please, what is this? Is it true Binance has confirmed that it has pegged trading against the US dollar, USDT, which Nigerians are really interested in? What's the situation?
From the statement they gave, they passed earlier on, I believe that what Binance did was to just ensure that the Naira is not as volatile as we are experiencing. Basically, so they actually benchmark with the previous day closing trades and ensure that the prices for the next day are not significantly above that. However, I think they will be in the best position to really understand the dynamics behind their decision.
Okay, but what does it mean? Does it mean if there was supposed to be a peer-to-peer transaction now, you would use the rate of the previous day? Just give us an example.
Okay, so I mean, basically what it means is if the previous day closed at, let's say, 1,700, for instance, all right, just like the same kind of directive that the CBN gave to the IMTOs, whereby I think they've gone back on it now. That's previously, that they shouldn't trade above plus or minus 2.5%, so that helps the Naira not to just, either dip too fast or, go up too high. So essentially what that is, because it's a free market, right? But so willing buyer, willing seller. But what they're trying to do is ensure that the people who are buying are not just buying. So if the previous day closed at 1,700, even though, yes, I'm a willing buyer, I shouldn't just decide that I want to buy at 1,800 without any significant. I mean, if while people are bidding for assets normally, the bids are in small increments and not necessarily huge jumps. So I think that's essentially what Binance tried to ensure, that someone is not just bidding 1,700 this minute, and the next bid is 1,800 and 1,900 and then 2,000, just like that.
So does it sound like Binance is working hand in hand with the federal government of Nigeria, or is this just an initiative of Binance to help the situation that the country is in at the moment?
I believe that they're acting in national interests. Of course, the FX issue, any business that's operating within Nigeria, within the crypto space, understands that the FX issue is something that is of national concern. And so, so every well-meaning organization will be willing to support the government in whatever initiatives that they are pushing. I mean, but if they are working directly with the federal government, I really cannot say. But I believe that every well-meaning organization, including ours, and other members of our coalition, we also ensure that, I mean, there's no rush to buy USDT from, member organizations. So if we were to be an exchange buying, there's no reason why an exchange is going to be rushing to buy up all the USDT in the market at whatever rates necessary. So essentially, there might be speculators, but, in the national interest, everybody is, to maintain, some kind of rates that makes sense.
So, with this now, do you see perhaps in the nearest future possible collaboration and regulation, of the crypto space in Nigeria?
Yes, evidently. So, I mean, what brought about all these peer-to-peer trades in the first place? The rise of peer-to-peer came after the CBN, put out that directive in 2021, stopping banks and financial institutions from providing banking services to cryptocurrency exchanges. So what that meant was that we as exchanges could no longer buy cryptocurrencies from the users and pay them Naira, because we had no access to banks. So platforms that were providing peer-to-peer, which means they act in escrow, one user to the other person, they both agree, and then all the platform is doing is facilitating the trade. So that became very popular. That's what everybody has been using right now. So evidently, if CBN were to resign on, they've gone back on it. There's regulation coming up. It's about time that they actually went faster with the regulation and ensure that they put power back in the hands of the exchanges, which are under regulation, and they can actually give some level of control, to ensure that in situations like this, everyone is not just buying, because it's very difficult to control a peer-to-peer market. I want to buy at this rate, even if it's just $1. And for me, I probably just think, okay, well, 100 Naira above doesn't really matter. But then, if people are using those markets to actually determine prices of what it is, because when you go on CBN platform to actually check what's today's rate for the dollar, you actually don't get anything. You get something ridiculously lower. So everybody's using what the peer-to-peer markets are saying. However, it's a fault of anybody, not really, but as a nation, the government needs to actually step in and
what's the rate now?
Regulation.
What's the rate now, Sheon? The peer-to-peer rates?
I mean, peer-to-peer rate, I think is well over 1,850. Last time I checked.
Well, still looks like we have a long way to go, but thank you so much for sharing your views with us this afternoon. Sheon Denia is the Chief Executive Officer of Alpha Gig Technologies. The struggle to save the Naira is still on. What are you doing in your own corner? What am I doing in my own corner? I don't know. But we'll keep talking about it and working at it because we don't have a choice. We need to save the naira. It's the currency that we have. That's why we draw the curtains on business and corporate here this afternoon. Thank you so much for being a part of it. The journey starts again tomorrow, 10 a.m. I'll see you with more conversations that will be relevant and current to you. I'm Ini John Mekwa. Enjoy the rest of your day.